Good morning, viewers. I'm Vinette Gasson, COO at Catalyst Fund Managers, and this morning I'm joined by Marcus Erlang, Portfolio Manager and Director of our local property hedge fund. Marcus, let's get right into it. Your Catalyst Alpha listed property hedge fund has had another stellar year. Maybe share with our viewers just a little bit about the performance of the fund and maybe just what went right and what went wrong.
Yeah, thanks, Vinette. I think it's another pleasing year to deliver to our investors a return of just short of 15% net of all fees. I think what was, exceptionally challenging in this year is that not only do we have our day jobs, which is, selecting which stocks we think will perform well and being short underperformers and deciding how much to be in the market and how much to be out the market. But you're still working in an environment where macro news is dominating stock market returns. For the last 2 or 3 years, the rising interest rate cycle and the decreasing interest rate cycle has been very, very topical. And you had a year, 2024, where you had 3 major elections, be it the South African elections, the US elections, and the UK elections. So the hedge fund in its DNA always needs to be positioned in a way that whatever outcome happens, you're not going to put capital at risk. So I think going into the South African election, it was fairly obvious that there was a very binary good, which luckily is what we got, and bad outcomes. So I think what the fund did really well is be nimble to react to news flow. So when we saw that it was imminent that we were going to have a sort of a good outcome in the South African elections, we brought our short exposure all the way back. We went long all of the large cap SA proxies, which are liquid and get the immediate love from a improvement in sentiment, and we put some currency hedging on to make a provision for a strengthening rand against other major currencies. What we were probably caught a little bit unaware by was that from the beginning of 2022, you've had sort of 2.5 years of extreme negativity in listed real estate as interest rates were rising. And when September came along and the rate cutting cycle started in South Africa and in the United States, we were positioned in a way that we expected further, dollar weakness, and we expected a rally in global equities. So the fund had, nibbled away at some offshore exposure and still had some currency hedging on. We didn't expect by, November 2024 for the party to be over and for, negative news headlines to dominate again with, Trump's inflationary policies, possible tariffs, the dollar strengthening again, and global listed real estate selling down, 7.5% in dollars. So we got into the market. We are holding the line on this one. We are increasing exposure offshore. We're seeing it as a good buying opportunity, and you can already see in the beginning of January, some more favorable inflation prints are pointing towards possibly, not such a bearish interest rate cutting cycle, and there's already been an improvement in sentiment, and listed real estate is starting to recover. So all in all, a very good year. It was just, I guess, Q4 took us a little bit by surprise with the violence of the global equity sell-off.
Marcus, let's focus in on the SA side of your portfolio. We know that SA listed property has shown a lot of resilience. I mean, if we just look at the 2024 calendar year, the ALPI delivered very close to 30%. So maybe let's just focus on that and maybe give us like a broad insight into exactly what the key catalysts were for that stellar performance, and maybe specifically also focus a little bit on Q4 of last year.
Sure. So I think what's been quite surprising probably for the last 2 years, as interest rates have risen, there's been higher inflation in South Africa, is the resilience of the industrial and specifically the retail subsectors. With interest rates rising, mortgages get more expensive, car payments get more expensive. Inflation, it makes that there's less money at the end of the paycheck to pay for discretionary purchases. Nonetheless, retail has been a very solid subsector, which has contributed well to top line growth for a lot of the listed REITs. What is positive for us, though, is that we are seeing green shoots of an improvement in the office subsector. I think renewed business confidence within South Africa after the election outcome, the BPO subsector really mopping up a lot of the vacant space in offices. And I think the Western Cape becoming a major leading business hub within South Africa has seen, vacancies decreasing. And I wouldn't quite say that we are at the start of a growth cycle. You're just seeing green shoots of a little bit more tension between demand and supply within the office sector. And I think just from a sort of a subsector performance as a whole point of view, you last year, or rather 2023, you saw listed real estate be a very surprise outperformer versus bonds, equities, and cash. And I think 2024, having a second consecutive year of very strong performance versus other asset classes, it just makes investors' ears perk up a little bit, and we definitely are getting a little bit more renewed investor interest in the subsector.
Yeah, I think that's been a question from a lot of our investors. Is there more to come? So maybe let's focus on going forward, and we focus on this new year that we're in, 2025. What is your broader outlook for this year for the SA property market?
When you have a year like last year where we're up 30%, almost 30%, the temptation is there to take some chips off the table and allocate elsewhere. But we're still very constructive on the subsector of SA listed property. I think a big differentiator this year is, while you might not be lining up for another 30% year, we think the downside risk to this year's earnings is far lower than it has been in previous years. Last year we were sitting here, we still had load shedding, the election was looming, it could have gone very badly. I think and there was no real certainty that the interest rate cycle had even peaked, let alone started cutting. So I think as we sat here last year, the range of outcomes was anywhere from minus 30% to plus 30%, which luckily we got the latter. This year, like I said, I don't think we can line up for another 30% year, but I think the downside risk is just far lower. So I would say the band of outcomes is probably a little bit tighter. That being said, I do think that companies last year, they were possibly conservative in their forward guidance, even though they guided towards inflation or inflation type plus type growth. I think a lot of the companies were quite conservative in what their assumptions were for load shedding, what their assumptions were for the interest rate cutting cycle. So I'm hopeful that as a catalyst this year, what we're going to see is outperformance of previously stated guidance. And I think the market, they require consecutive periods of market rental growth or distributable income growth before they get comfortable that it wasn't just a recovery off a low base, and rather a start of a structurally different growth story again. So what I'm hoping happens this year is that the companies not only deliver on their sort of inflation or inflation type plus growth, possibly beat it, but for the year ahead, which the market puts a lot of emphasis on, they point towards another second year of growth. And then you've got, consecutive periods of growth, and I think the market will reward the companies for, the start of a possible growth cycle in SA listed property.
Marcus, in previous dashboards, you've explained to our viewers the kind of like the three pillars within your portfolio. So SA listed property, global listed property, and then cash and cash equivalents. So we've touched a lot on the SA part, and that we feel like we're in a recovery phase. Let's hone in on global listed property. How are you currently positioned within the global piece of your portfolio?
Yeah, so as I mentioned a little bit earlier, we did get into global property as SA ran and global property underperformed. We were incrementally increasing global listed real estate. I think the sell-off in Q4 just gave us an opportunity to increase exposure further. So we are overweight global listed real estate. We do have above long-term norm levels of net exposure. And I think in global listed property, you don't have to look far for a very attractive IRR package. There are a number of companies, very strong, solid companies that would give you, distributable income yields of 5% in dollars and a short to medium term growth outlook of, north of 5%, which is way ahead of inflation. So you're getting an IRR package of in excess of 10% without looking very far. I think, unfortunately, listed real estate is extremely sensitive to what bond yields are doing. And as I mentioned earlier, bond yields spiked in Q4 up to near 5%, 4.8% in the US. And unfortunately, that's why global listed real estate sold off. But we believe long US bond yields should settle somewhere around 4 to 4.25%. And if bond yields come back to that, I think listed real estate should get a sort of a quick 10% re-rate. You're also in an environment of specifically in the US, a very strong economy. You've had 100 basis points of cuts already by the US Fed, and you've got very strong prospects from the company. So you could be going into a little bit of a Goldilocks scenario for US listed real estate. The one thing to Provisio though is that just, from a what's exciting, what's piquing people's interest at the moment, unfortunately, it is just very much focused on the growth subsectors and, the likes of the Nvidias and the Teslas and those kinds of stocks. But I think for the patient investor, for the long-term investor, there's a lot of value in listed real estate, global listed real estate, and that's the kind of investors we are. So we're willing to be patient and wait for that value unlock, and we think there's a number of catalysts in 2024 and going forward that will be key to that value unlock.
Marcus, last but not least, I think you are as excited as I am about, as I can phrase it, the new kid on the block with a retail version of your fund that we are launching imminently. So based on roadshows, viewers, that we've done over the last 18 to 24 months, it was very clear to us that there's a very strong demand in the market for a retail version of this product. So we've decided to enter into agreement with Amplify, very reputable company within our industry, who's built an incredible strong presence within the retail market. So this fund will be under the banner of Amplify and will be forming part of their very strong product suite. The prelim launch date of this fund is the 1st of February of this year. Marcus, maybe share with our viewers just why you are so excited about the RIF launching very soon.
I think you said it very well, that with conversations on roadshows and with potential investors and just seeing how the industry is evolving, a retail product has been a long time in the making, and yeah, we are very, very excited about it. I think the cherry on top of the cake is the fact that we have partnered with such a great partner, be it Amplify and Sanlam, to provide a hedge fund under their best of breed sort of funds, a listed property hedge fund utilizing local and global listed real estate to generate the best absolute risk-adjusted returns, along with all of the other sort of hedge fund tools we have at our disposal. And we think the fund will appeal to the investor, the retail investor that wants to get the very best listed real estate like returns without having the qualified investor restrictions being monthly liquidity and the high initial investment lump sum. So hopefully by the time this video airs or very shortly thereafter, like you said, we've got a preliminary launch date of the 1st of February. This fund is live, and yeah, it's a very exciting next chapter for us within the business.
Marcus, thank you for your time and for your valuable insights as always. Viewers, thank you for tuning in. If you'd like to learn more about our listed property hedge funds, please refer to the full Q4 2024 dashboard. Or alternatively, please reach out to me as per the contact details below. Lastly, we do want to wish you a prosperous 2025. And until next time, thank you and goodbye.